Good afternoon, everyone. This is Henry, and as we get into tonight's free video, I wanted to continue to focus on some of these sentiment conversations that we've been having. One, because doing them through this venue provides some continuity to those of you that are watching them each night, and two, because it is a big part of what is helping me make my trading decisions in the current environment. So with that being said, we start off yesterday's review talking about how there is an extreme to this put call, and it's extreme to the more modest measure. And I'm going to give you two ways of thinking about measuring this. The first way is the way that I grew up learning this, and it is essentially to say that readings above 1.0 are where we have seen a shift, and where you may have that retail public that is so generally focused on buying calls that they've shifted. So now you have bears buying puts, and you also have that general retail public also buying puts, and that drives the ratio up and above 1.0. So that is a metric worth following, but it's not going to be as extreme as what we saw today. So again, the other way of measuring this is then to compare it to itself. Because you'll see these closes above 1.0. It doesn't necessarily always dictate a low in equities, though if you compare these previous signals, you'll see that it did coincide pretty cleanly. But that final part is saying don't just look for values above 1.0, compare the reading to itself. And again, this is why this is worth talking about today, because you can see that this was the highest put call reading that we had seen all the way from back here on October 13th. So if you think about how that type of really large inflow of puts helped drive that next leg in the indices, that's another big part of what we saw today. So I find that those extreme readings provide a good way of thinking about fading the overall sentiment of the open, and based off where we saw it this morning, that was exactly the trade. So I like to try to work those sentiment readings against technical areas of support. It was a little sloppy through the open this morning, but we managed to get on the sale of the 39.20 put spread, and ended up being a pretty decent way to trade through the open. For tomorrow, after reeling off of that decision, I want to show you the futures chart, because this is what, and again, you guys know, I don't know how tomorrow is going to open. And if we open up tomorrow and the S&Ps are below 39.34, anywhere below that, then it's not really going to look like any type of a continuation move higher. But if the futures can get up into this 39.80, back up into the range of the previous cash session, open up somewhere in this vicinity, then I believe the focus of the day will be a test of 4,000 for the monthly expiration, and there should be a few ways to participate in that. So again, this pattern is what I want to be looking for. I'll have the cleanest approach to trading it if that's what we see. Down here, all bets are off and I'll have to recalibrate, but I hope that's a helpful roadmap tomorrow and shows you some of the signals that I've been using here lately. So you guys have a great rest of your evening, and I hope to see you in the chat room tomorrow. Hey traders, this is Henry with simplertrading.com. I wanted to thank you for watching today's video. I hope you found it helpful, and if so, be sure to click the like and subscribe buttons down below. If you would like to also see me putting these ideas into action and trading my own account live in front of you, be sure to sign up at simplertrading.com, and I hope to see you in the chat room sometime soon.